I'm gonna explain how exactly I'd start day trading from day one if I had to keep my knowledge and reset my accounts back to zero. Before I go to a point of developing my trading style and setting my trading up so as to be able to make sometimes $5,000 single profit days, I wasted years of my life that I didn't need to waste had I known these things that I'm gonna show you in today's video. I'm gonna start with exactly what you need: charting apps, the exchanges, the prop firms, etc. Then I'm gonna show you how the chart works so that you are able to understand trends and candlesticks, as well as trading psychology, which is probably the most important thing that will either make or break your trading. And in the end, we're gonna take everything and apply it into creating your own trading strategy while backtesting it together to see what works and what doesn't. This video will have tons of value. If you're a beginner or an intermediate, you should absolutely lock in and watch till the very end. Okay, so let's first start and set the foundation of how trading works and how we should be looking at the market. There's a lot of technical elements going on and it can be really confusing, and if you learn bits and pieces of it, it can throw you off the rails. This is a very simple way to understand how the market works and how the mechanics of it work. So what we see when we are looking at chart, which in this case is this blue chart, is decreases and increases. If you take this into account, a chart is showing us a representation of mass human psychology, meaning that there are buyers on the other hand and sellers. Now, this is done with multiple ways, such as algorithms and physical trading, and really all sorts of different ways. No, it's not as simple as people clicking buy and sell that's moving a chart. The general premise here is that the market is adjusting to fill imbalances that are filled by supply and demand. When price is moving up, it means that there is supply from sellers and demand from buyers. If at some point buyers lose interest and the demand starts to go down, then price also will see a pullback, and vice versa. Here price moved up 8%. Means that buyers were interested in buying from sellers, so it means that the supply was there, but buyers outweighed the total sellers, so price moved up. Here buyers started to lose interest, price dropped. Here we saw a massive upsurge to the upside, means that buyers were interested in buying that asset. So to sum it up, if the market outweighs the supply, the market is going to move up until there is another point, like here, where the supply starts to outweigh the demand and the market will correct, until once again there is more demand than supply. Price will go up. So simply put, our job as traders is to find areas in the market where we can enter at a certain price, have the price increase to another point, then how many of those we bought times the increase is gonna give us our profit. So as traders, generally, we tend to use a lot of tools, one of which is the position tool. That tool lets us set our stop loss and take profit level so that we are able to see our trade play out in the chart live while also seeing our potential risk to reward. Our goal is to have price move to our desired direction without going to hit our stop loss. If that happens, then we are out. If price manages to hit our desired direction, then we make this, which in this case is 9 hour. If price ends up doing this, then we are minus 1 hour. Fun fact, it happens a lot in trading. You set a stop loss, price gets you out of the trade for minus 1 hour, and then immediately shoots to the downside. And you are there sitting like an idiot watching the potential R you could have made. I know, it's pretty damn annoying. Okay, so you likely need 3 major things in order for you to get started. First things first is going to be, of course, TradingView, which is the platform that will literally be your home base, where you are taking setups, analyzing the market, and drawing potential ideas. Second thing that you are going to need is something to take trades on. Of course, you'll need some experience before doing that. Personally, I just use Bybit for crypto. For my Nasdaq trades, on the other hand, I'll use TopStep, which is a prop firm that will allow me to use 150k or whatever you want from here, just by paying a small fee and passing a challenge. But of course, this needs a lot of experience to be done, trust me. The third thing that you're going to need is a trading journal to journal your trades and over time analyze your mistakes, what worked, what didn't, and find out what you need to do in order for you to minimize your losses. I'm gonna provide one in the end of the video, but more on that a bit later. So here we have our TradingView chart. I know how confused you are right now, so let's start off with the basic things. In order for you to trade, you need to have some specific pairs. What's cool about TradingView is that you can have different flags for different things. For example, I have my green list for my day trading. I use those assets every single day. My red list is is my stocks, and my orange list is my crypto. So the way you are able to add different assets here is by pressing the plus sign here and choosing what you want to add. For example, WTI sounds good. And now I have WTI saved here and I can switch between different assets. So let's take a look at my favorite asset, and that is Sol. Here you basically see a mess that is made up by institutions and people clicking buy and sell. I want you to think about gold, for example. When the supply of it starts to shrink, the price increases, as it is a valuable asset and the demand of it often outweighs the supply, causing the price to start to the upside. That's why you hear a lot of people saying gold is the safe haven, and truly it is. So considering that this is a green candle, price opened here, went as high as this, as low as this, and ended up closing here. Once again, this is a green candle, price opened here, went as high as this, as low as this, and closed here. Same is true for a bearish candle. Price opened here, went as low as this, as high as this, and ended up closing here. Another one. Price opened here, went as low as this, as high as this, and closed here. Another one. Price opened here, went as low as this, as high as this, and closed right here. These candles are not the same on all time frames. On the 5-minute time frame, we'll see that every 5 minutes we have a new candle. If we use the daily time frame, for example, every day is a different candle, way different from those 5-minute move you see here. TradingView, as you may know, may have some tools in order for you to do your analysis. You may have seen those messy charts with drawings that confuse you a lot. It's not so hard, so let's get into the most important tools of TradingView. So first thing you are going to need for your strategy is the Fib retracement and the Fib extension. Of course, you may pause if you want to copy my settings. You may have seen this tool a lot, heard many things about it, but don't know how the fuck to use it. So for an uptrend, you press from the bottom to the closest stop and you get those key areas. The Fib extension, on the other hand, is my favorite tool in trading. So in order for us to use it, we must press on the bottom, on the top of the wave 1, and again on the bottom, and we get those key areas. Here we have a trend line, 2618, perfectly tested, and we ended up crossing to the downside. This would have been a beautiful trade. Could have gotten an entry here, stop loss going here, and a take profit as wide as this, 16 hour. For a downtrend, on the other hand, you do the exact same thing. On a random point on the chart, I see a trend here, so the first wave is this one overextended a bit more. Let's do that again. This is the first wave, 0.5% tested, 2618, pull back to the downside. Random point on the chart, first wave here, 2618, almost tested, price went down. Most of the time, a trend will reverse when it tests the 2618. It's also common that it tests the 1618, and that is perfectly fine. So now, let's get into a section of talking about trading psychology. This is the most important part of trading that will either make or break any progress you've made so far. I've identified 3 major things you need to retrain your mind into, and then I'm gonna explain to you how exactly this works, so that once you get through this section of the video, you'll get an aha moment that's gonna clear you up to be able to proceed right away. First thing you wanna retrain your mind out of is that losing is by definition bad. As human beings, when we lose something, we think that we are not sufficient enough and we are doing something wrong. This does not apply to trading, and you need to understand that, as weird as that concept sounds. The next thing is being wrong is bad. This kinda ties into losing. Being wrong and losing money we view as human beings as something of our problem, something that needs to be changed by us in order to eliminate those wrong moves. This isn't the case at all. You need to completely flip that on its head. The third thing is the misconception that making money makes it a good trade. This is not the case whatsoever. Think of it this way. Anytime we are buying into the market, one of 2 things is gonna happen. It's either it's gonna move up and we're gonna make money, this position won't work, and we'll lose our contained risk. How we are going through that as traders is gonna dictate whether we are successful long term or not. Anytime we are looking to enter into a trade, we are already positioning ourselves to accept the fact that we can be 100% wrong. Our goal is to be exposed in the market so as to take advantage of a potential opportunity. In that sort of thinking process, a lot of people think that they need to be right all the time in order to make money in trading. Not true. Let's take this into an example. Let's say we have a total of 10 trades here. We contained our risk, so every time we lose minus 1 hour. In this scenario, let's say it's minus $100. 6 losses equaling a sum of minus 6, minus $600. Our wins, on the other hand, are open-ended. It can be 10 hour, 20 hour, 30 hour, but let's be more realistic here. Plus 6.2, plus 4.7, plus 3.1, plus 2.6, and all of that is 16.6. So 16.6 minus the sum of our losses, 6, bracket, multiplied by our risk, 100, and that is going to give us 1060 USD. So we made a grant being wrong 60% of the time. Okay, so that you know the general structure, let's go back on TradingView and understand how we are actually going to approach the market on a technical analysis standpoint. Now this is where there is a million things to focus on. I've boiled them down to 5 or 6 things that I'm looking for in order for me to find key areas in the market, and then I'm gonna give you a crash course on this. So let's pull up to a 5-minute chart. As you know, every candle is 5 minutes worth of price data. Let's take a look on how I'd read this chart. First thing that I'm always starting for is of course trends. Here is an uptrend and here is my trend line. So for a trend line to be valid, it needs to at least have 3 contact points. 1, 2, 3. Trends are basically areas in the market where price is moving towards a specific direction. So if it's moving up, like here, it's called an uptrend. But if it's moving down, for example, like here, that is a downtrend. Once again, going back to that boring supply and demand theory, when price manages to break below this trend line after a long time of respecting it, oftentimes it means that it's more likely to go down. Now this is not a perfect example. We managed to break it, we did a fake out here and ended up going a bit down and then going higher. Oftentimes having a trend line break is a sign that we'll have a huge move to a specific direction. Like here we have a trend line, broke down, could have gotten an entry here, crazy trade. So when price manages to break down of a trend line and come back up and test the opposite side of that trend line, that's called an underside retest. Here's what happened after an underside retest. Crazy. That is 40 an hour. Okay, so another really cool thing that I like to look for when I trade are fair value gaps. You can see them all over the chart. Like here, 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 here. You get the point. All over the chart. Right now, I have an indicator on. It's called Lux Algo Fair Value Gaps. You can turn it on and it's gonna populate them automatically for you. Why do I need fair value gaps? Why do I need them? Oftentimes, price will leave those imbalances behind and then come back later and test the midpoints and go higher or lower depending on what this gap is. For example, here, had I gotten an entry here on this fair value gap, could have made 4 hour. When those are tested, they tend to have a sharp reaction out of them, like here, here, here. So now that we are at this point and have all that knowledge about trading, I'm gonna take you through a strategy that I trade every single day. I'm gonna show you what I look for when going between those trades and how I apply this logic to be able to get into positions. I'm turning on the fair value gap indicator. What I'm gonna do now, I'm gonna use the 15-minute time frame in order to have a more zoomed out perspective so as to get a more refined entry on the 1-minute time frame. On the 15-minute, we are currently on a downtrend. I've already drawn here an invalid trend line. Now it's valid. 1, 2, 3. As you see, we are now testing a key fair value gap right here. Pretty key one. Kinda swept it. See how important this fair value gap is? Yeah, pretty important. It's also a key trend level. It's also key on the 4 hour. Tested this area once, pumped to the trend line and created that trend. Now with this in mind, it makes sense that price wants to go down, or at least take this trend line and then go down. But the overall bias here is that price wants to go down, so it is bearish. If the price manages to break the trend line and goes higher, we are expecting to see an overside retest and a move higher. In this case, our bias changes from bearish to bullish. So on the 1 minute, I'm looking for an uptrend so I can potentially short it. Right now, this doesn't look so good. So I took this trade recently. I entered here and I got out right here. You see the arrows. So what did I look for? It was a 5-wave structure. I had a trend line here. I got a pretty decent entry on this bearish fair value gap. My 15-minute was bearish, so I had a bearish bias, and so I managed to make 5.2 hour, which is 4.7k. If you actually want to take control over your life, then I actually urge you to watch this video. It's gonna help you out a lot. If this video helps you out, especially as a beginner, hit the like button and subscribe to the channel. Until next time, I'll see you in the next video.